Okay, so this next video lecture is about our module number 5. So this is entitled The Expenditure Cycle Part 1 for Purchases and Cash Disbursements Procedure. Okay, so for our discussion or topic, so just like in the revenue cycle, so we will discuss the conceptual and physical system of our expenditure cycle. So for the conceptual system, basically again, just like our revenue cycle, your expenditure cycle will be examined conceptually using our data flow diagrams as a guide, and also to trace the sequence of the activities throughout the purchases, processing, and cash disbursement procedures. So this conceptual system means that we will focus on what needs to be done. For the expenditure cycle, of course, the objective of this cycle is to convert the organization's cash into physical materials and human resources. These are needed in conducting the day-to-day business or activities of the enterprise. So most business entities, they operate on a credit basis, and they do not pay for resources until after they acquire them. So basically, there is a time lag between these events, and they are split, in the procurement process into two phases. So we have the physical phase, which involve the acquisition of the resources, and the second is the financial phase, where this is the actual disbursement already of the cash in settlement of the acquisition of those resources. So basically, there are two major subsystems also that constitute our expenditure cycle. So we have the purchasing process subsystem and the cash disbursement subsystem. Okay, so it follows our procurement process phases. So we have here an illustration, for the procurement cycle subsystem. So of course, first will be the purchase requisition, meaning the department who needs the item will fill in this requisition form and then submit it to the department who are responsible for ordering such items, or resources needed to the appropriate suppliers. And then after that, purchasing will be processed. So the item, the quantity, the quality of the resources that were requested will be forwarded to the supplier, to place the order. And then, of course, after the order was processed, the supplier will send the order to the buyer. So in this case, the NDP will receive the items, and before they will accept it, they will inspect and check to make sure that what they received is what they actually ordered. And then, since we mentioned earlier that most of the transactions under this system is made on credit, so that's why in this case, accounts payable will now be established in the books of accounts of the entity, because they have now the obligation to pay since they already received the items. And then, after a period of time, or within the specified period of payment, so this is now the stage where the entity will pay or settle their accounts or credit to the supplier. So this is the actual cash disbursement, or this is when the actual cash disbursement will take place. So this is the procurement cycle subsystem. So this is how it is usually done and processed. So the goal of the expenditure cycle is to provide the needed resources to the organization, and this can be broken into different objectives such as the following. So first is to purchase from reliable vendors, where the entity have already established a good relationship, and they expect that these suppliers will deliver them the quality and quantity of resources that they needed. Okay. Another objective is purchase high quality items. Another is to obtain best possible price and to purchase only items that are properly authorized. So this is to avoid manipulation and fraud, of course, okay, of buying other items which were not requested for. So these are the common goals of providing the needed resources to the organization under the expenditure cycle. Aside from that, we also have the objective to have resources which are available when they are needed. So meaning there is no possible stockouts that will occur, okay, because this may hinder the smooth flow of the process, okay, of the activity, and it can also cause delays which are costly, okay, on the part of the entity. Another objective is to receive only those items which were ordered. That's why in the illustration that we have earlier in the subsystem, so there is inspection and checking before the orders will be received and accepted. Okay, another is ensure items are not lost, stolen, or broken, because this is a loss on the part of the entity. And lastly is pay for the item on a timely manner so that the entity can get advantage of the discount and most especially the good relationship that they have with their suppliers, okay, with their good credit standing. So those are the objectives, okay, of our expenditure cycle. So we have here the data flow diagram system, okay, for the purchase system. Okay, so it shows here the steps, okay, and the resource or the department, the necessary documents, okay, that is filled in and forwarded to the appropriate department or person responsible, okay, until these are also posted to the general ledger. Okay, so for the manual system, we also have here the illustration. Okay, so let's just run through that. Okay, so for the purchase subsystem or purchase system, okay, so we have here normally this begins with inventory control. So here, when the inventory levels drop to reorder levels, when we say reorder level, this is the amount or the number of inventory in the stock room where it signals that an order should be taken place before the entity will suffer stockouts or to avoid stockouts. Okay, so basically there is a system or technique, okay, that will let the entity know if their stock level drops to reorder point. So a purchase requisition or PR will then be prepared and the copies will be sent to the purchasing and accounts payable department. So the purchasing prepares or the purchasing department will prepare the purchase order, and this will be for each vendor, and they will send copies to the inventory control and the accounting or accounts payable and also the receiving departments. So upon the receipt, the receiving department will count and inspect the goods. So this is when the order was placed and the supplier has already sent, okay, the ordered items, and the items were received, okay, by the entity. So the receiving department is the one who is responsible for counting and inspecting these goods. So there will be a blind copy of the purchase order. Okay, so this is done so that the receiving department will be forced to count the goods, okay, and not just conform to what is being listed there. So this is to make sure that there is proper counting and making sure that what is ordered is what is received also. Okay, so after that, a receiving report will be prepared and a copy will be sent to the raw material storeroom, the purchasing department, inventory control, and to the accounts payable department. So for the accounts payable department, eventually, they will receive copies of the purchase requisition, purchase order, receiving report, and the supplier's invoice. So this will serve as the source document in recording these transactions. Also, the accounts payable department will reconcile these documents, post this to the purchases journal, and will record it in the accounts payable department or in the liability, account, in the accounts payable subsidiary ledger. So the accounts payable department will periodically summarize the entries in our purchases journal as a journal voucher, which is sent to the general ledgers department. And after that, the accounts payable department will also prepare a cash disbursement voucher and will post it in the voucher register once the payment or settlement is approved. Okay, so this is normally the entry, okay, for this transaction, purchases transaction. So debit to inventory or control, or inventory control, or purchases account, depending on what type of inventory system is being used, either perpetual or periodic inventory system. Okay, if you are using a periodic inventory system, then we will use purchases account. And if you are using perpetual inventory system, then we will use inventory control. So the credit will go to our accounts payable or control, or just accounts payable account. Okay, so the general ledger department will post from the accounts payable journal voucher to the general ledger, and this will be reconciled, okay, with the inventory amount and also with the account summary received from the inventory control. So this is an internal control that is being performed to make sure that there is correct balances of these accounts as well as the actual inventory on hand. Okay, so those are for our physical the conceptual system of our expenditure cycle.